Hello traders, this is Dave the Trader back with the ThinkorSwim Analyze tab tutorial. In this video we're going to look at the different types of charts that the Analyze tab can show you. I'd like to direct your attention to this section right up here, from lines, step, and metric. The current settings are the defaults and provide the standard risk graph for the position. The lines menu says +1 at expiration. This means that the graph will show the metric, PL open, that's the profit or loss, since the opening of the trade. It will draw a line to show that metric as of today, plus a line showing the P&L at the first expiration of the options in the position being analyzed. Down here, only the check trade is being analyzed. A single, long, October 21st, 155 call option, purchased for $5.25. And this is what its risk graph looks like. The break-even point for today looks like about $152. And the break-even for the trade at expiration is about $160 per share. The lines menu looks like this. Single, date, day step, vol step, and expiration. This menu gives you the option to see the metric graphed as a single line as the values are today, or that same line plus the curve for another date, or lines for a series of dates, or for a series of volatilities, or the values at the expiration dates of the options in the positions being analyzed. So first off, what do you get when you pick single? If you pick single, you just get a single line showing the chosen metric for today's date. The default metric is PL open, or the profit or loss of the position since it opened. This yields your standard risk graph for the trade, at least for today. Now, we're looking at the value of this position that we're analyzing right here, including only the checked items. So this long call option and this curve shows the P&L of this position as of today, which is a function of the underlying price. Let's look at some of the other options. Instead of single, we have date. Date is going to use this date right here. So let's set this date to about 7 days from now. The 26th. And then when we look at the date, the line as of that date, you can see the value of that option along the entire range of values has dropped because options are a decaying asset and this is a long position. One thing to note about the date option, if you change the date like we will right now, there can be a significant delay before ThinkorSwim updates the line. This cyan or blue line, it is the line indicating the metric as of this date. If we push it out to, say, the day of expiration, which is, or the day after expiration, that morning, then it should be quite a bit different than what it is a week from now. But you may have to wait for it. In my experience, at times the chart will update by itself once you change the date. Other times it won't. And you need to select date again from the menu to get the chart updated. There. So on the date of expiration, actually the morning of the date after expiration, the profit and loss line looks like that. Now for this next selection, day step, I'll pick the 4-line day step. And voila, we have today's line, still this magenta line, plus now we have 4 added color-coded lines presenting the chart for 4 different days in the future. For the day step and vol step selections on the lines menu, the chart uses the value of the step setting here as the step size. For day step, the default is 7, meaning that the difference between each line is 7 days. This key here shows which line colors correspond to which dates. In this case, the magenta line of today says September 19th, 2022, which is the current day. 1 day step is 7 days in this case. So the lines are drawn for 7 days from now, 14 days, 21 days, and 28 days from today. We can go to 8 days between lines, like that. So today happens to be September 19th, with Apple currently at about $150 a share, $152 a share. On September 27th, 8 days from now, the call position will have dropped from a small profit down to a loss of about $55, $56, assuming Apple stock is trading for exactly the same as today. You can easily see that in order to make money from this trade, the stock price must go up, and not slowly either. There's close to a $10 per day headwind against this trade, as this value of theta tells us. With a step of 8 days, it gets us right up to October 21st, the day of expiration, and actually the morning of expiration. If you go beyond that date, say by setting step to 9, the line metric is no longer really defined. So ThinkorSwim just draws a straight flat line for the date of October 25th. If it floats your boat, you can also go -1. From 0 to, meaning all 4 lines are today, to -1, -2, and so on, to show the results for days in the past. Makes sense. Just plug in a different date into the formula for the value of the option. Let's see what you get. Now you can also select vol step, which is similar to day step, but it increments by % volatility. Now apparently, ThinkorSwim uses the volatility of the asset, in this case Apple, to start with, rather than the volatility of the option being graphed, or an average of the option's volatilities, or something like that. So here, we start with a volatility of 38.59%, and go up by a default increment of 5%. That gives us, at 38.59%, coming from this number right here, our magenta line. Now, as we increase the volatility 5% each line, the value of the option increases. So the value of our position increases from $17 today to $108, then $199, then $290, and then finally $381, if the volatility were 58% rather than the current 38%. Finally, we can select expiration plus 1 at expiration. Gives us our default line of today plus another line drawn at expiration. So it's the same thing as the date being set to the date of expiration, actually the date just after, the morning after expiration. Now, to show you the effect of looking at multiple expirations, we're going to need a different trade to analyze. So I've brought up a calendar spread on Robinhood as a good example. Notice it's been a month since I recorded the first portion of this lesson. That's why this date has changed from September 19th to October 19th. And now we're talking about October and November expirations rather than September and October. Not that it's important, but I say that just so that you know that you didn't miss anything and you're not going crazy. So back on October 14th, I put this calendar spread on Robinhood. The trade consists of a long 10 November call and a short 10 October call. And I put on 10 of them, so 10 long calls and an equal number of short calls. Now this trade has had a few days for theta to work its magic. So it looks like it's worth about $135 today, with the current price right about at the sweet spot of $10 per share, the strike price of the options. According to this risk graph, showing today's profit and loss line and the P&L line at expiration, the trade is currently worth close to its highest possible value for today, with Robinhood trading at just over $10. If the share price stays where it is, then the trade could earn right around $369, assuming shares trade down to $10 exactly. The October calls will expire worthless, And ThinkorSwim is projecting that we'll be able to sell the November calls for about $1. So starting with a credit of 47 cents for the short calls and a $1.12 debit for the long calls, we pay nothing to close the shorts and sell the longs for $1, leaving us with a 35-cent per share credit, or $35 for each calendar. We have 10 calendars, so we'll walk away with about a $350 credit. Okay, so on the lines menu, instead of +1 expiration, there's +2, +3, +4. We're going to stick to just +1 and +2. Let's see the +2. The blue and magenta lines are the same. If I center my cursor back at $10, we're still looking at, well, now $370.53. This is actively trading, so the price is moving around a bit. But roughly 360, 370, something like that. Now I want you to notice something about this. As I move the cursor to the right, I still see minus $650, saying that by the second expiration, I will have lost $650. As I move it higher, the number climbs, goes above zero, and as the share price drops, I earn more and more money. But what I'm holding on to is a call. This is the risk shape of a put, not a call. This is a bug in the ThinkorSwim platform. So watch this. If I go down and exclude one of these options, we see that at expiration, the call option looks like a call option graph. If I turn this back on again, it looks like a put. So what's going on? Well, I think it's a bug in the platform. It just doesn't deal with this particular case. So there you have it. That's what +2 expiration would do. I haven't played around with +3, +4 expirations once I noticed this flaw. And quite frankly, I don't put on any trades that have 3 or 4 different expirations. So that'll do it for this section of the Analyze tab tutorial. I hope you've gotten something useful out of it for your trading. And as they say, smash on that like button and hit subscribe to follow me with more options trading goodness. The next section of this tutorial is going to discuss that metric menu and how to interpret the views of the Greeks that it gives you. Until then.